I own gold because I'm afraid it's going to go higher. I don't want it to. I'm afraid it is because the dollar or the yen or the yuan or the peso or whatever country code you're in is getting weaker. And so, again, it's not to make me rich. Gold will not make you rich. Silver, maybe you could argue, could get bigger multiples. Gold just preserves what I have. That's why it's a little bit less sexy than a lot of the asset classes people want to talk to. But Ronnie Sturfel had a great graph, called it the graph of the decade, of just the inverse relation between the S&P and the commodity cycle. If we continue higher for longer and the S&P tanks into a disinflationary, deflationary market, you're going to see a commodity super cycle. That's outside of precious metals. It includes precious metals. Eastern central banks, you look at flows right now, gold flows in the Middle East too. It's not the answer to everything, but I just follow the cycles. But I don't see a scenario where fiat currencies get stronger in any zip code right now.
Matthew Piepenburg, partner at Matterhorn Asset Management, recently highlighted an intriguing insight: the seeming improbability of fiat currencies gaining strength in the current global landscape. Instead, he foresees an impending commodity supercycle, given the steady hold of gold prices near the crucial $2,000 per ounce mark. This stabilizing of gold prices has notably driven down both the dollar and bond yields, indicating a loss of confidence in fiat currencies, particularly the US dollar. Piepenburg's assertions are substantiated by data from the United States Federal Reserve Bank, which, as of April 2020, indicated a staggering 96.2% depreciation in the US dollar's value since 1913. In this context, gold emerges as a perceived sanctuary, a wealth store impervious to the risks of devaluation that plague fiat currencies. The surge in the price of gold in China, notably surpassing international prices by over $100, serves as a testament to the confidence in gold's purchasing power, irrespective of the benchmark fiat currency in use. Moreover, recent reports from the World Gold Council have shed light on a significant surge in gold acquisitions by central banks, reflecting a striking 14% year-on-year increase. Of particular note is China's contribution, with its central bank accumulating over 2,192 tons. Piepenburg interprets this shift towards gold accumulation as a lack of faith in the monetary and fiscal policies of prominent developed economies. Join us as we delve into insights shared by Matthew Piepenburg in his recent interview with David Lin. To stay updated with our latest uploads, be sure to subscribe to our channel and activate notifications. Thank you.
Inflation metric. And I know when Egon started investing in gold in 2020, Egon von Greyer's my partner, gold was at $300, is now almost at 2,000 today. It's had its sideways moments, its rises and falls, but he would argue that it actually has outperformed the S&P on an inflation adjusted basis. Depends on what definition of inflation, but I don't need to be an apologist on the debate of gold versus, say, cryptos or others. I'm not against these views. I have a simple policy, a simple view. The inherent purchasing power of the US dollar since we went off the gold standard in 1971 has fallen by 98% when measured against a milligram of gold. I'm not going to measure my gold vis-a-vis the CPI scale from the Bureau of Labor Statistics because I think it's an open lie. Everyone on Wall Street knows that. We're underreporting and misreporting inflation by a multitude. But I just know this much, that no currency, no paper currency gives me more confidence than physical gold. So I don't even look at how you price gold, what, in US dollar? Look at it in the yen today. Look at it in the dollar. Look at it in the euro. Look at it in the Turkish lira. It's just that I don't have faith in paper currency. You get away from CPI, you get away from inflation. Look at paper money versus monetary money, and gold will be your best asset as a wealth preservation mind. Central banks throughout the world aren't just collecting gold because it's a pet rock. I think they're collecting gold because they don't trust paper money and they don't trust monetary and fiscal policy at the leading developed economies anymore. And so I think gold is rising despite the DXY is at 106. I know it was at 112 in last October. The dollar, to Brent's point, is still the best horse in the glue factory. It's still the best currency in the world. But despite a strong dollar, despite rising yields, despite FFR rates where they are in the last 18 months, gold is being incredibly resilient. And now it's actually approaching all-time highs. Not there yet. And I'm not here to tell you when, but it's fascinating. I think it's a combination of fear. It's a combination of chaos. It's a combination of lack of distrust in the American narrative in general, politically, socially, et cetera. It's also a lack of trust in the American dollar longer term. I mean, it was James Turk is talking about default risk in the U.S. I don't see default risk. I just see a continuing get to the point where they're going to have to print more money to support those bonds and keep those yields under control That will be inflationary. That will debase the currency. And I think people are realizing what's the US going to do? Where's it going to get its growth from? What kind of GDP? We need 30, 40% GDP annually to get us back. We need to cut spending by 70%. It's never going to happen. So those who just look at the simple, stupid metrics of debt and spending don't see any way out for the dollar but something Japanese, where they're going to have to debase even the world reserve currency to support an over its ski debt problem, an unprecedented debt problem. And then we have a DC that can't even agree party to party or among parties and is going to do more spending next year. We simply are spending more than we make. Tax receipts and GDP don't pay for it. Currency is going to be debased. Again, we've had backdoor pivots to the BTFP, to the Treasury Department. We're going to have outright pivots or outright yield curve control eventually. And I'm not talking 30 years from now. I'm talking in the next few years or even the next few minutes. I don't know. No one really does. But you don't need to be a weatherman to look out at the horizon and say, those are gray clouds. I got to get an umbrella and rubber boots on today. I don't know if it's going to rain at noon or 12:30 or 3:30. I just need to prepare for the rain. And I don't know what will be the headline. Will it be Martians? Will it be COVID? Will it be another pandemic? Will it be some other bad guy in the world? But the real problem with the US dollar isn't the BRICS. It isn't Putin. It isn't COVID. It's our policymakers. Generation since 71 that welched on the gold backed currency, got rid of the chaperone. We've been spending more to get reelected or get Nobel Prizes by printing money out of thin air. It's not sustainable policy. A 10-year-old could see that eventually if you just look at the math. I'm not trying to be flippant. It just doesn't work. And I'm not trying to be dramatic either, because I don't think it's the end of the dollar. It's not the end of America. It's not the end of civilization. It's just not going to be the same 10 years as it was the last 10 years. And it's not the same dollar and it's not the same IOU. And the evidence is overwhelming. It's not even predictable. It's happening right now. The evidence of a soft landing is not here. The evidence of a hard landing is everywhere. The fact that gold is rising in this environment proves that people don't trust these currencies and IOUs anymore.
As geopolitical alliances like BRICS, ASEAN, and the SCO deliberate on de-dollarization initiatives, the potential consequences for their native economies and the broader global financial landscape come into focus. This movement is not confined to these alliances alone. Many countries in Africa and South America are also contemplating joining this trend, marking a potential paradigm shift in global trade dynamics. Piepenburg underscores that the transition away from the US dollar, or the establishment of a formal gold-backed currency, is a gradual event. Highlighting a recent report by the World Gold Council, central banks globally purchased a record 399 tons of gold in the third quarter of 2022, amounting to approximately $20 billion. This surge in acquisitions has notably contributed to elevating the global demand for the precious metal. Piepenburg interprets this move as indicative of a diminishing trust in the US dollar and a simultaneous rise in confidence or interest in gold as a reliable store of value. Let's get back to the interview.
Luckily, I can timestamp that by having interviews before the summit or even at the summit. I was with Rick Rule even before the BRICS summit. I was saying, look, first of all, I do see all the dangers in de-dollarization long term. I saw it from the day the sanctions started. But no, I did not see a gold-backed BRICS currency in August of 2023 for a number of reasons. But I've also said there doesn't necessarily have to be a BRICS gold-backed currency for gold to play a role within the BRICS system. I mean, they're already basically arbitraging the delta with hard assets and gold. They don't have to have that gold stored in some centralized place in Russia or redeemable by a Russian central bank or a Chinese central bank to still find trading networks, physical networks with gold as part of the exchange. It's basically a kind of a glorified barter economy that they can create slowly. Regardless of a BRICS-backed currency, though, the trend of getting away from the US dollar slowly, steadily, but surely is the real headline. But to think that that's going to happen overnight or the BRICS-backed currency, I didn't think so for a number of reasons. I don't think any sovereign country, including the BRICS nations, want to give up the power or the right to possibly print more money in their own national central banks. And so they don't want to give up that power. Rick Rule and I agreed on that. I do think de-dollarization is a massive shift. I think the move into real assets and gold in particular among the BRICS is a massive shift. I think the fact that 44 countries are doing bilateral trade agreements outside the dollar is a massive shift. I think the fact that China can now buy oil outside of the US dollar is a massive shift. But again, to say that this is going to happen overnight or the dollar is going to be destroyed, the world reserve currency is over, I agree with Brent Johnson. That's not going to happen overnight. What I disagree with Brent Johnson is I think the pace of is going faster than he would agree. And I don't think the US Treasury or the US dollar is the safe haven that he thinks is going to be in the next crisis. I just don't think it will. I could be wrong, but I don't think there's going to be a massive flow into our declining, unloved U.S. Treasury and our debased U.S. dollar. Not at the same level. It's not going to be the ruble, the yen. It's not going to be the peso. It's not going to be the yuan. So in terms of world reserve currency, the US dollar is still supreme. It's just its hegemony has changed dramatically. And no, and yes, I'm a gold executive out of Switzerland. It's not going to be the gold bar either. It's not going to be a gold backed currency. But what you're going to just see is what we're seeing in the last 2 years, central banks dumping US treasuries and stacking physical gold at record high levels. And even investors, and we have investors that are high net worth and fairly sophisticated, they know there's not going to be a gold backed currency either, like the BRICS, but they can become gold backed themselves. We can each become our own central banker from our own home or our own vault or our own storage facility, however we choose. And that's what a lot of sophisticated investors do. And I'm not going to name names. I knew a lot of guys from Wall Street and the hedge fund world who are portfolio managers who trade in arbitrage, credits, equities, long, short, multi-strat funds, and they don't trade gold in their books that they take their 2 and 20 on, but when they have their own personal money, they invest in gold vaults somewhere outside of the US. And the smart money is basically trying to solve their own currency problem on their own. And retail investors are doing the same thing, where they put it in a shoebox or they put it in a private vault somewhere in the Swiss Alps. More and more people are catching on that the inherent purchasing power of their Canadian, Australian, American dollar, or of their euro or kroner or French or Swiss franc just isn't what it used to be, and is going to continue to get weaker as national decision makers debase their currency to pay off debt.
Gold's inability to convincingly break above $2,000 an ounce is creating some cautious sentiment in the marketplace, with some analysts saying that prices might need to consolidate in the near term before the precious metal takes a run at its all-time highs. Will gold eventually overcome the $2,000 per ounce barrier and make a decisive move towards retesting or surpassing its historical peak? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.